So what's
Yeah.
been going on with you? Anything new and exciting in the world of silver?
I'm trying to figure out when silver will take on a life of its own. When, regardless of what gold's doing, silver is going to do what it does because of its industrial, right? Regardless of what the stock market volatility does, regardless of what the dollar index, really try to figure out or put a timeline together or what is going to make that happen of when silver will take on a life of its own, not be so pegged to gold since they're used for two completely different things.
Well, I read something. Yes, I'm going to read it to you that will kind of answer that question, I think. And it says that the Asian and central bank demand continues apace, keeping London and Comex short of physical liquidity. Comex was never intended to be a delivery market, which is true, Slayer, because most of my career, less than 1% of contracts stood for delivery. Anyways, it says that Comex was never intended to be a delivery market, yet according to record since late November 2020, when stand for deliveries became a common occurrence, having been rare. Some 2,136 tons of gold have stood for delivery and 24,072 tons of silver. These are staggering figures and do not include exchanges for physical, a significant but unknown portion of which were swapped from London forward contracts and then delivery taken. And when you realize that a country like Russia is increasing the amount of gold that they're buying to the equivalent of 36,000 ounces per day, there's silver in that too. They're not just buying gold, and gold and silver, by the deliveries that we are seeing off of the exchanges, are going to enable silver to have that moment. And it's interesting that the Fed is now going to pivot and lower rates at a time when stocks and real estate are just a little bit off their all-time highs. I mean, the stock market is pretty damn well near its all-time highs, and real estate's still 15, 20% above its 2006 peak. What's going to happen to those assets? Well, they may go much higher. They really may. But in the face of gold and silver, which have been suppressed for all of this time as assets have risen in this low interest rate environment, in an environment where you're seeing the world stand for delivery like we are seeing here, draining the exchanges with our own stupidity, I think you'll see gold and silver go higher than people can believe. And in fact, even in the face of a potentially blow off in stocks where the equities could go much higher as you inject more money into the system, I think you will lose ground in terms of ounces of gold and silver when measured against the Dow. So yeah, these are very unusual times. These are very concerning times. The biggest election of our lifetime in just a few months. The BRICS meeting in October, in October, where they have told us in principle they've agreed to a new settlement currency called the unit, which will be 40% gold backed. It has become a period of time where I really do believe that the world is no longer interested in holding for any meaningful time the debt of an insolvent country who is wayward at home, in their own ideologies, in their own pursuit of justice, of election integrity, of immigration, all of these things that we seem to have lost our bearing upon. At the same time, we're a broke country at 123% debt to GDP, increasing debt by an amount of $100,000 a second, every second, and bankrupting future generations. So why the hell would anyone want to hold our treasury debt when we're not going to pivot and lower rates, supposedly? That's just insanity. We're 50% away from the inflation target, if you believe the nonsense that is the CPI. And, if they really are pivoting because employment seems to be slowing down, and it is, I mean, some of the numbers that we see with employment right now are very scary. We've seen, let's see, what do the numbers say? Full-time employment dropped by 1.3 million workers in August on a year-over-year basis. That's the seventh consecutive monthly decline. Since 2023, full-time job count in the U.S. has fallen by a whopping 1.5 million people. Meanwhile, part-time employment rose by 1 million year over year in August, mostly comprised of illegal immigrants. This was the 16th straight month of part-time job gains, the longest streak since the 2008 financial crisis. And so when you talk about what's happening, you have full-time employment being shed. You have massive part-time jobs replacing it, much of which is from illegal immigrants. And the Fed's dual mandate is obviously for inflation and full employment. By the time history has shown, by the time that they address the employment is a lagging indicator. We're already in the recession. And in terms of a recession, not only has the yield curve uninverted, which always portends a recession. In fact, it has every single time since 1950. It says when the curve uninverts, and it has officially uninverted, that you're going to hit a recession every single time since 1950. And there's also something called the SAM rule, which was developed by an economist named Claudia Sam, and it has anticipated the last 9 recessions with a 100% track record. It identifies the onset of a recession by looking at the increase in the unemployment rate. And the unemployment rate, if it increases on a 3-month moving average, if it rises by 0.5% or more above its 12-month low, you're in a recession. Well, bang, we're at 0.53. We're in a recession. So between the uninverting of the yield curve, between the SAM rule, between all of the putrid employment numbers, the revision of 818,000 jobs just a few weeks ago, and then you have the insiders, which just happen to be fleeing the sinking ship. Hedge funds have dumped stocks for 12 of the last 13 weeks. And at the end of the second quarter, the majority of the bigwigs like Bezos and Zuckerberg and all, and what's his name, the Oracle of Omaha, what's his name? The great investor in the United States. Why can't I think of his name? From Omaha. Come on, help me out, Slayer.
Warren Buffett, Jim Rogers.
Warren Buffett. Warren Buffett is sitting on the most amount of cash he's ever had, basically. This is the biggest value investor everywhere. He's sold everything, or tons of it, including a huge position in Bank of America, who holds a massive short position in silver. You know, is it ironic that these guys are already out of a large portion of their position? So things are beginning to reach that breaking point with the economy, with the pivoting of the Fed, with the reintroduction of quantitative easing, with the massive deliveries we see off of Comex and the LBMA. All of these things are happening at once, along with the BRICS meeting and the election in November. These are not dull times. These are not times to be speculating. And I don't think there's ever been a better time to look at silver. And it will have its moment. It will have its day. And when you see, China, the second largest producer in the world, as Sean Kunkun told us, buying up doré and concentrate in Latin America, paying up to double what the West will pay, and importing it back home to refine it there so it doesn't come off of an exchange. As the second largest producer in the world, when you see India buy between 7 and 800 million ounces of silver over the last 3 years, which is 10 times more than the Comex has, which is more than the LBMA has in total, which is about 800 million ounces, of which 500 belongs to the ETFs, only 300 million backing the trades, where the London Metals Exchange can trade up to 3 billion ounces of silver per day, 3.5 times annual global mine supply. All of these things seem to be converging. So yeah, I think we will have that episode where you and I get on and say, holy shit, silver's at $75 an ounce. But that's not the reason you buy it. You don't buy it to become wealthy. You buy it because it is wealth. And yes, it has the potential to make you wealthy. It does. But there are very few things I've ever seen in almost 35 years of finance that have the pedigree that silver does in terms of demand, supply, that imbalance, the lack of supply, the diminishing supply, in ground, above ground, the uses that are expanding, and the monetary side of things. So, there's this old belief that it's better to be 60 seconds or let's say 6 months or 6 years early than 60 seconds late. And in this environment, that I think will hold to be very true.